The Central Bank of Kenya says the country's debt has dropped by 1 trillion shillings on account of a strong shilling and investor optimism. The bank says the Kenyan currency has gained more value over the US dollar after the country managed to offset the 1.5 billion euro debts in February. CBK Governor Dr. Kamau Thuge has also raised concerns with the rising portfolio of non-performing loans that now stands at 15.8% from 12% 6 months ago.
A combination of feeble shilling and worsening balance of payment has created a cocktail of crisis in Kenya's fiscal space, increasing overall public debt by 1.93 trillion shillings as of December 2023. This saw the total stock of the public debt jump to record levels of 11.1 trillion shillings, raising concerns over the country's debt sustainability. However, investors' nerves were calmed in January when the government settled the 1.5 billion euros debt that was due on 10th of February. This has managed to stem a steady slide of the Kenya shilling, which was trading at 160.1 against the US dollar.
We estimate that we have reduced the shilling-denominated dollar debt by at least 1 trillion shillings. This transaction that we did in February with the Eurobond, which removed the risk that people felt was there.
Central Bank Governor Kamau Thuge says the Kenya shilling is now trading at 130, and the regulator expects the shilling to continue with its value correction in the coming weeks.
We will just allow the exchange rate to find its true level and really just intervene when we see that there's excessive volatility. So I can't give you a particular level of the rate.
Today, the shilling closed trading at 129 shillings against the dollar. The CBK governor is also raising concerns over the rise in non-performing loans, which has breached the 15% mark for the first time in over a decade. Banks have seen a surge in bad loans due to the economic meltdown.
We are very cautious about it. We have enhanced just our even consultation with the banks to make sure that they have provisioning adequately, that they have enough capital.
The governor noted that the country expects a disbursement of $1 billion from the International Monetary Fund to boost foreign reserves, which stand at 3.77 months of import cover. Weri Mujenga for Prime Edition.